On today's episode, we are going to take a look at two new growth stocks. I'm pretty sure most of you have not heard about these two, but let me say both of them are actually looking really good right now. And let me show you why in this episode. The first company we're going to take a look at is one in the streaming service. The second one is going to be one that is trying to change the real estate market. And no, don't worry, the two stocks I'm not going to talk about today are Netflix or Redfin. I'm pretty sure most of you guys have heard about them. Like always, for each stock, we're going to take a look at the charts. We're going to take a look at fundamentals. We're going to take a look at ownership. In one of these companies, one insider owns over 50% of the business right now. Yes, over 50%. So that's enough talking. Let's get this episode started. All right, before we go any further, guys, make sure to hit the thumbs up. Make sure to hit the subscribe button. It helps so much with the YouTube algorithm. So the first company we're going to take a look at is ticker CURI. This is Curiositystream Inc. So Curiositystream Inc., like I mentioned, is ticker CURI. Right now, it has a market cap of $677 million. This is the one in the streaming platform. After hours, it is up about 10%. So the market cap right now is about $750 million. And I'm not going to lie, after looking at the numbers, and we're going to look at them, I still believe it's a great time to buy. I usually put money into the market every Friday or Thursday, and I do believe this is going to be one of them that makes it in there. But if you want to know what stocks actually make it, make sure to join my Discord channel. It's free to anybody that wants to join. So now let's take a look at Curiositystream, right? So I was actually, because I have Optimum as an internet provider, I was able to get their service for free. They kind of have a package right now for those that have Optimum online. Go to their website, curiositystream.com. So this is pretty much a Netflix for people that want shows that have some form of factual, some form of, if they're trying to learn something, right? It's more like a Netflix for those that want to learn. We can take a look at some of the shows they have here. If you go to browse, you can learn about science, history, technology, nature, society, lifestyle. There's also some kids shows for kids that want to learn about that too. So it's a Netflix for when you don't want to waste time and you actually want to learn something cool. In all honesty, I would probably love this setup if it had like a business section. Like they have some shows, mainly animal shows, space shows, and stuff like that. But you can look at their UI right now while I'm signed in. You can see it literally looks like Netflix, except the shows are different. So let's take a quick look at their charts for you guys. So Curi right now, like I mentioned, is ticker CURI. Right now, the first thing I'm seeing is the stock price is definitely a bit overextended from its moving averages. And right now, with the stock price up about 10% right now after hours, it's definitely going to be a little more overextended. What does this mean? It doesn't mean much to many, right? Especially as a long-term investor. I'm a long-term investor. When looking at charts like this, it tells me, hey, Jose, there is the risk that there might be a pullback sometime soon. The pullback is not guaranteed, and if it does pull back, one doesn't know how much the pullback is, but there is always that risk. So I do believe this one might see some volatile days because it's overextended. We might see some strong pullbacks, or we might continue to see some strong days like today after hours. But so first thing is overextended. That's not a red flag, but something I wanted to mention. The second thing is we can see there's definitely a nice amount of volume building up around this high 16s, low 17s. Like I mentioned, even though right now we're probably closer to the $18 range, doesn't look too bad. The company's still micro cap, $750 million valuation. So now I also wanted to take a look at how was Curiositystream doing in Google Trends. Are we seeing an increase there? So right now, we can see the end of December, Curiositystream has actually been more searched on Google. I wonder if this is people like me just trying to find out more about the company, and we can see there is an improvement there. If that is, hopefully that's true, because that means more views on this YouTube channel. But we can see, right, overall it's a trend increase right here, especially right now at the end of December. So now let's take a look at some recent news about Curiosity System. So the Curiositystream. The first thing is they have partnered up with the distribution partner in India, Tata Sky, to bring world-class factual entertainment to viewers across India. So now with Tata Sky subscribers, they will be able to use CuriosityStream, learn more about them, and watch more of them shows. At the end of the day, it's going to increase word of mouth, and India is obviously one of the biggest country population-wise, so I do think it was a great move for them to do that. And now let's go a little bit deeper into it. Now let's start looking at fundamentals of the company. So now let's take a look at fundamentals. So for their third quarter of 2020, revenue was about $8.7 million. This was up 83% compared to the same time last year. They also had gross margins increase to 61% year over year from 59% in quarter 3 of 2019. So we can see strong revenue growth right now, and they're also seeing strong gross margins. Of course, right, gross margins for a company like this should be very high because it seems like right now they are doing a lot of what Netflix did at the beginning, a lot of licensing of other programs to bring them into their platform. But as things progress, they're going to start building more original content for themselves, which can go, again, continue that Netflix path. So right now, total paying subscribers are about 13 million at the end of their third quarter. And this is up 108% compared to the same time last year. And they had about $23 million of cash by the end of September 30th of 2020. Here in business highlights, they do mention a few things. The first thing, they're saying that they're strengthening their team by kind of hiring veterans in the system. One of them, for example, was Matthew Blank. He is now a board of director for Curiositystream, and he used to be the former chairman and CEO of Showtime, right? So they're getting people with experience. They kind of did give an outlook for the fourth quarter. They expect revenue to be about 11.3 million. That's a growth of 69% compared to the same time last year. They also gave a guidance for 2020. So for the full year of 2020, they expect revenue of about $40 million. That's about 120% year-over-year growth compared to the same time. And for 2021, they're expecting about $71 million of revenue, which gives this about an 80% year-over-year growth. Now, at a $71 million revenue, I was trying to do the math, right? So right now, the company has a market cap of $750 million. So with the 71 million revenue expectation for 2021, it kind of gives it about a 10.5 price to sales ratio, 10.5. Let's take a quick look at Netflix. I was going to do this later on, but Netflix for the full year of 2021, they have a sales price ratio of 7.5. So you might be like, Jose, I mean, it's more expensive than Netflix right now. Why? So what's the point of it? Why shouldn't I just buy Netflix? I mean, that's definitely a great point. For me, I would expect CuriosityStream to be a little more expensive than Netflix, right? So from 7.5 to 10.5, CuriosityStream is growing at crazy levels. Even though Netflix is still growing in about 20%, 80% year-over-year growth, 120% year-over-year growth. Obviously, you're paying for a premium for that. So analysts right now are expecting the company to grow 40% on average for the next 3 to 5 years. This is a hyper growth stock. Well, unfortunately, if we take a look at cash flow from operations, they're not positive there right now. They are also not positive in earnings. Again, this is very similar. It's great to compare with other companies in similar market. Netflix, at the beginning of this phase, they were not positive in cash flow from operations. The reason being is they spend a lot of money on licensing those other content shows. And earnings for some time weren't positive either. But we can see analysts do expect this company to be profitable by the end of 2022, so less than 3 years from now. That's great. The only thing is I'm gonna want to make sure that they have a very strong balance sheet to be able to survive the time. So right now, if we take a look at their balance sheet, CuriosityStream has about $15 million in cash, and they have less than $1 million in debt. So they have plenty of cash at hand right now and to be able to survive, in my opinion. I also want to show you guys, look at this top shareholder. Their top shareholder right now is John Hendricks. He owns 55.76% of the business. Individual insiders own 65.7% of the business. And we can see right now, John Hendricks is the chairman of the board, and he is also the founder and independent chairman of the board. So we can see if an individual insider still owns this amount of money from the company, that to me is super, super bullish. And like I mentioned, individual insiders own about 65.7, general public owns 23.7, institutions own 10.7. So what else can we take a look at? So we took a look at their balance sheet. We took a look at their future growth. We took a look at their ownership. I want to also take a quick look at their income statement a little closer, right? I might bore you guys with this type of analysis, but I really like to get in deep to see what's happening with the company. So for the 9 months of 2020, the company had about $28 million of revenue. They actually spent about $28 million in advertising and marketing. So we can see why this company right now is not profitable. They're spending a lot of their money on advertising and marketing. And a lot of people might say, Jose, that sucks. A product can sell itself. And that's kind of true to some extent, but you still need some help from advertising and marketing. But what I want to show you guys is, look, impressive. About a year ago, for the 9 months of 2019, they spent about the same amount of money in advertising and marketing. But the amount of revenue they made 9 months a year ago was nowhere near the amount of revenue they made now. So in 2019, the first 9 months, they made about $11 million. So they were spending a lot more money on advertising than they were even collecting in revenue. But because of that power, now revenue is actually almost a 1-to-1 ratio of advertising marketing, where a year ago it was more like 2.5-to-1 ratio, where they had 2.5 more cost on advertising than they had revenue. So that's impressive, right? This is growth stocks. This is the power of growth stock as they continue to grow. That now they need to continue to grow that revenue. Eventually, cash flow from operations is going to catch up to them. Eventually, earnings are going to catch up to them. Eventually, right? So that's the overall hope of these growth stocks. So like I mentioned, the company to me does not look bad at all. So let me know, right, guys? What are your thoughts right now on Curiositystream? I definitely would like to hear from you guys. This is definitely gonna make my list, at least for tomorrow, for me to decide if I'm gonna buy or not. The second stock we're going to take a look at is one in the real estate market, like I mentioned. And if you guys enjoyed that past analyst of a quick overview of the company, when I took a look at their balance sheets, took a look at their income statement, took a look at cash flow statements, make sure to check out my Patreon. Every week I drop weekly educational videos for those that want to learn how to become a better investor. So definitely check that out. I am going to be closing it in the next 2 days for the full month of January, and it won't be open again till February. While you're here, also make sure to find that link to Weeple. If you deposit $100 using my link, we both get a free stock. And what's better than a free stock? Let me tell you, nothing. Nothing's better than a free stock right now. So go click that link, go deposit $100, and we both get a free stock. All right, so the company we're going to take a look at is Opendoor Technologies. This is ticker OPEN, traded under the NASDAQ. I do believe this was also another SPAC deal. SPAC companies are just booming right now, right? I could be wrong in there, but in all honesty, it doesn't matter if it was a SPAC or not now that the acquisition is done. So the company right now is sitting at $26.53. It's actually up after hours about 1.7%. Market cap is sitting at about $14.5 billion. For those that don't know, Opendoor is an online real estate company based in San Francisco. Like I said, very similar to Redfin, very similar to Zillow. So if we take a quick look at their website, like anything, right? The best place to find out about a company is their website. Here we can see you can sell your home from the comfort of your couch. Right now, you can sell 2 ways. You can sell either directly to Opendoor. Opendoor can give you a cash offer, and you can be done with your sale in a matter of probably even a few hours to a day, and then you can move on with the rest of your life. The second thing is you can list with Opendoors. They maximize your sale price. They save on fees. They give you expertise every step of the way. Very similar to what Redfin, very similar to what Zillow does. So again, I want to say, right now, these 2 companies are pretty cool. Both markets, I believe, are markets that are going to continue to grow for 2021 and for the future, right? The real estate obviously needs a big change, and we're seeing it with Zillow, we're seeing it with Redfin, but there's still room, right, for plenty of companies out there. But to me, the streaming market, Curiositystream, is one I'm really, really liking because I do believe there's a huge market for more like educational type streaming content, and I do believe that Curiositystream can go a lot further. So I do believe both these companies are class act right now. I want to say this is probably one of my favorite episodes in a long time. 2 companies that are looking really good. Let's take a look at charts for Opendoor Technology. Right now, like I mentioned, ticker OPEN. First thing I'm seeing, right, there's a nice amount of volume with the stock price where it's sitting at right now. The second thing I'm seeing, it is not overextended, right? We can see right here, it was overextended from its moving averages. It did a nice pullback and now sitting again by its, I believe that's my 10 EMA. I could be wrong right now. But right now, right, good move, not overextended, and good volume around the price point. Now let's take a quick look at fundamentals. So the company, like I mentioned, $14.6 billion valuation. It is expected to grow 38.7% for the next 3 to 5 years. This is a hyper growth stock. We saw Curiositystream was another hyper growth stock. It is expected to take a big dip in revenue this year and next year, all because of COVID situation, right? It has kind of slowed down a bit in house sales, especially the first 2 quarters of this year. Even though things are picking up right now, it's not at the same levels. The second thing we're seeing is they're barely profitable. They're almost there. They can almost reach it, but they are positive in cash flow from operations. So that is a great thing. Now, if we take a look at their balance sheet, they have about $550 million in cash. They have about $207 million in debt. They have a strong balance sheet. Again, I want to say Curiositystream had a stronger balance sheet in regards to ratio. But remember, Open has positive cash flow from operations right now. It allows me to kind of overlook this kind of, I wouldn't say bad balance sheet, this not strong balance sheet like Curiositystream. Next, if we take a look at ownership, right now the general public owns 56%, individual insiders own 8.5%, most 27% are owned by venture capital and private equity firms. So again, this isn't, I guess I'm just so in love right now with Curiositystream of 67% ownership by insiders that this doesn't look that great to me. Doesn't look weak, right? But I think I'm just infatuated with Curiositystream right now. But we can see we definitely have the co-founder owns about 6% of the business right now. Obviously, this is a bigger company too, right? It's right now it's 14.5 billion, where Curiositystream was about $500 million. So there is the difference in price there. If that company ever reaches a 14.4 billion valuation, I don't expect individual insiders to be that 67%. So now let's take a look at some of their presentations to see some cool things about Opendoor. So one thing that really struck out to me was the leadership that they have. We can see their co-founders, their president, all of them have some really strong experience in growing companies. For example, the chief product officer, he used to be the vice president of product for Netflix. The co-founder and the CTO was also the head of data science, and that's the chief technology officer. Chief technology officer. He was the head of data science at Square. And here they talk about their head of engineering. They used to be the director of Lyft. The head of research used to be a data scientist at Google. So we can see they definitely have strong leadership, something I really, really like right here. And leadership with experience that makes sense in their role. The head of mortgages used to be the vice president of Capital One, the big bank. So again, we're seeing strong leadership with strong experience. The other chart I wanted to show you guys is this future growth that this company is expected to see. So Opendoor, they kind of mentioned that, hey, our first 6 markets that we entered in first quarter of 2020, they gave us about $2.7 billion of run rate revenue. Right now, they are in 21 markets and just scratching the surface. That right now gives them only about $5 billion of run rate revenue. With their current playbook that they have right now, it takes them to about $50 billion in revenue. That is insane, and that's only 4% of the market share. Now, if they look at the whole United States market potential, that's a total annual gross market value of $1.3 trillion. Again, the future, very small company right now, if they can expand, like I said, this is the power of growth stocks. If they can make it, it can be a good winner for us investors. Company's looking pretty cool, right? I am an investor of Redfin, and just because I am an investor in Redfin, I don't want other competitors to go down. If I am really bullish in that market, I don't mind having multiple companies in that market. In all companies, in all markets, I believe there's always plenty of room for many winners, right? And that means more money for me, and I don't have to choose the right stock. At the moment, I am not sure exactly if I want to enter Opendoor. And if you guys want to do live analysis, I do stream on Twitch every Mondays and Tuesdays. So make sure to follow me on Twitch. And I also do one random day on the weekend, either being Friday, Saturday, or Sunday, closer to like in the morning time for those that can't make it at the night. So one thing we're seeing, right, revenue growth for 2020 was pretty bad for this company. They're seeing about a 50% decrease, mainly because of COVID situation. For 2021, they're seeing a 38% increase compared to 2020, but it's still lower than 2019. I think they're just being a bit conservative right now due to the whole COVID situation. Makes sense. But by 2022, they're expected to grow dramatically. 2023, again, strong numbers, really strong numbers for the company. So I do believe that's it for me on both these companies. I want to say, right, personally, market-wise, Curiositystream looks my favorite. It had that very strong ownership growth. The overall market is one I'm personally more excited about. Like I said, I do believe the real estate market is one that also needs developing, right? And even though we have Zillow, even though we have Redfin, again, I believe there's plenty of market for all of them, and they can all do well. Even with 5% market cap each, right? They can all do pretty amazing, and for investors as well. I don't know. I want to say I am leaning to buying Curiositystream. I'm not sure about DoorDash. I know I've seen ARK has actually been buying them, but let me know, guys, what are your thoughts? Are you planning on buying any of these two? Fundamentally, they look great in my opinion. Future growth look great. So that's the thing, right? If we can find companies with strong balance sheets, with strong future growth in markets that are booming right now, what is there not to like? Obviously, with companies like these, with growth stocks like these, they're going to be very volatile. Some of you might have seen them that they're probably too overextended for your taste. I don't mind investing in companies like that, right? Because I know that they can keep winning and winners keep on winning or something like that, right? But at the end of the day, the overall, we've seen strong over 100% growth. I invested in C at $60 when it jumped from $32. I've jumped in Celsius after it's gone up 100 and something percent, right? And now these are ones that have given me over 200-300% gains. So I don't mind, from prior experience of investing in the market. I'm a self-taught investor who's been doing this for about 6-7 years right now. That kind of growth doesn't really deter me from buying into a company. So take care, guys. Have a good night. See you next time, and take care.